Hello everyone, welcome back to the Street School. My name is Shiva Gurunathan. Today we are going to see very interesting and important option strategy, which is bear put spread. We have cherry picked the stock name called MANAPPURAM Gold Limited, and we just implemented our strategy in on stock itself. Before we go and dive deeper, if you are just to step into our channel, I would request you go and watch the entire video, because when you are regularly following my video, I'm sure it will enhance your trading skills, and moreover, if you implement on the market, I'm sure you will make some money on it. So after you just watch the video, if you want to leave a comment, go and leave the comment on the comment section, or if you like it, go and click the thumbs up button, and don't forget to subscribe to my channel and notification button. People who are giving the immense support to my channel, I really thank for that. Please provide the same support to us. We don't want to waste further time, just we will get into the session. Before we dive into the topic, first we will give the overview about what we are going to discuss in this entire video. So I named it called one stock analysis, because we will go and cherry pick one stock. In that stock, we will go and do the volatility analysis. So I'm sure some of you might heard about the volatility, one of the important concepts in the stock market. So when I say volatility analysis, here we are going to discuss about the historical volatility. So historical volatility, which means we will go and calculate the past price of the particular stock, and we'll do some mathematical, statistical calculation. We can estimate the stock trading range. So I can shortly say, like, we can go and estimate the stock or index for a particular period of time, how long the market will fluctuate, what would be the upper range and lower range. We can go and calculate it through the volatility analysis. So as I said before, that the statistical concept like a standard deviation, daily returns. I'll go and explain it in further videos. So after that, we will go and do the technical analysis. I'm sure everyone familiar with the technical analysis. The reason why we do technical analysis, before we go and implement our option strategy, we have to know what is the what's our view on market, whether it's going to be a bullish or bearish. So through technical analysis, we can go and find a we can come to the conclusion. So after that, we will go and use our option strategy. So what kind of strategy we are using? So what is the profit and loss we can expect? So we'll go and give the very brief introduction about our option strategy, and finally we will conclude the video with option Greeks, one of the important parameter in option strategies, because all the option Greeks like delta, gamma, vega and theta have a different characteristics which will influence on the option premium. So that the reason I said that's a very important strategy. We'll go on conclude this video within 15 to 20 minutes, so I'm sure it will be really helpful on you. So first, let us begin with statistical analysis. So as I said before, I have cherry picked the stock for you, MANAPPURAM Gold Limited. The current closing price of the stock would be 207 rupees 35 paise, which is the last close. So the average price movement of the stock for last 1 year, 4 rupees 85 paise average price movement for MANAPPURAM Gold. So I have given here volatility levels. As I said before, this is a historical volatility level. So if you want to know more about what is the volatility, what is the thought process behind that, how we will go and calculate the target, or especially stop loss, how we can go and set up our trading setup by using volatility level, I have made a separate video on it, but that video would be in Tamil, in my regional language. If you are comfortable in Tamil, you can go and watch that video. In case if you want in English, just leave you a comment in the comment section. Definitely I will make separate video in English for a historical volatility level and its thought process. So this is the volatility level I have given here. Just give you a very brief introduction about this volatility level, how we can go and interpret that. So here I have given the name like R1, R2 and S1, S2. Please don't think as a resistance and support. Here just for our convenience, easy understanding, just I named it as R1, R2, S1, S2. Actually this R1, R2, S1, S2 is a standard deviation. So an example, R1 and S1 is a standard deviation 1, and R2 and S2 is a standard deviation 2. As I said before, by using volatility level, we can go and estimate the fluctuation of the stock or index for the particular period of time, like a weekly, yearly, monthly, even we can go and do it for day. But here we did for 5 days calculation. So because here we are going to hold this stock for next to trading session, okay, next to 5 trading session. So how we can interrupt this? So first let us take this R1 and S1. So this is the level. I can tell you 68% confidently through next 5 trading session, Manappuram Gold will trade between the range like 196 to 219. This is the trading range for the Manappuram Gold Limited for next 5 trading session we can expect. So how much possibilities are would be there? We have a 68% of chances. The remaining 32% of chances there will be possibilities Manappuram Gold will trade outside of those ranges, either upside or downside. So as I said before, this is a standard deviation one. Usually we will start and customize the trade with begin of standard deviation 1. If in case if you want to increase your confidence level, you can go on opt for standard deviation 2, which means I can tell you 95% confident for next 5 trading session, Manappuram Gold will trade between the range like 186 to 231. So the remaining very few possibilities are there. Manappuram Gold will trade above this range, either upside or downside. So but you can go and note the average price movement for this stock is a very minimum, like a 4 rupees 85 paise. That's the reason I'm suggesting you to go and start with the standard deviation 1, which means R1 and S1. So and we can also go and note the daily returns. So actually the daily returns is around like mean, so minimum we can expect average price movement around like a 4 to 5 rupees. But we'll go and see the opportunity, how far we can expect the extraordinary price movement like a 10 rupees or 12 rupees. What are the possibilities there? We'll go and check in technical analysis. So and so this is the daily volatility percentage. 5 days volatility percentage for Manappuram Gold. So we can expect 5.32%. We can expect volatility level. Historical volatility level. So we can go on see as a buyers and sellers strength. Usually we say like a PCR. Put call ratio, so which is in 0.25. So it means overbought, so that will be a more buyer than seller. So usually it will soon we can expect market will reverse for a while. So this is be considered as a overbought. So just I showed the level here, like different level 195, 200, 205. You can throughout see all the levels from the current closing price of 207 rupees 55 from then. So buyers are predominating, even though buyers are predominating, but there won't be a huge differences on it, which is with the minimum number of deviations. Buyers are over the sellers. We can expect a correction on the price flow. So this is the statistical information about the Manappuram Gold Limited. We'll go and check the technical analysis, how the candlestick charts are performing. So whether we can see any clue on it, we'll go and check on technical side. So what you are seeing on the screen is Manappuram Gold daily chart that you are seeing. You can see last 3 trading sessions. So before Friday, we could see the doji symbol on the chart, and especially when last trading session on Friday, it clearly shows inverted hammer. So we could see a very long upper wick. It clearly shows there will be a lot of selling pressure above the price level of 210. So we can expect market will come down for a while. Okay, so this is a candlestick chart says, and how far it comes. So we can go and draw the Fibonacci retracement, just I did before I start the session. So the minimum level we can expect like 194 at the range, but our target is we have fixed as 200. So very minimum, just we are expecting a 7 rupees downfall. If it price reaches 200, we will book the profit, we will exit our trade. Okay, so this is what our plan here. And we can also check like ADX, the momentum, almost it's in peak around like 54 at the range. So we can expect market will fall down next to 10 to 12 rupees price with the same momentum. Let us see how would the market behave on upcoming trading session. So up to my analysis, I'm expecting the price will reach minimum to the level of 200 price range, and moreover the price is it's below the 4 days moving average. So let us see how far that would be. And before we go on conclude this technical analysis, we'll go and check the 60 minutes chart. It's the same thing. So if price breaks 203 levels, I'm sure it will come to the all the way to minimum 195. So as I said before, we don't need to wait till 195. Once price reaches 200, we will exit the trade, we will book the profit, we will go and see how much we will earn. So what's our option strategy, why we have chosen that strategy, so we'll go and see that. Okay, so this is what I want to tell you about the technical analysis. Next, we'll go and see the option strategies. As I said before, here we are discussing about the bear put strategy. So what about our market view? When you want to initiate the bear put strategy, your market perception would be moderate bearish. So you can expect market will come down with the nominal price. Okay, so minimum like 4 to 5% of downside we can expect, that we call it as a moderate bearish. So you should have some moderate bearish market view when you go and implement this strategy. So what would happen if price reaches your target? You will get a fixed profit on it. So here we will not be getting like an unlimited profit like that. Here you will get like a fixed profit. In case if market reverses, that will be a fixed loss. So this is a two-leg strategy, which means we are going to initiate two positions simultaneously. One is a long put, another one is a short put. So at what strike price will go and choose? Usually you can go and initiate the trade with in the money for long put. Short put you can go and initiate it on out the money. So this is a theoretically we can use like a long put is in the money and short put out of the money, but I just used my own strategy. So usually I will go and customize the strike price depending upon the expiry date. So what would be my target days? So I'll go and customize that. So as I said before, the current market price would be 207 rupees 35 paise. Put call ratio, as we discussed, is 0.25. So the expiry date of the contract would be 26th August. This is the expiry date, okay, but we are not going to hold the contract till expiry. Okay, so we'll go and keep the contract till next to 5 days, the maximum next Friday. Okay, so this is the day we will go and hold it on it. So as I said before, the historical volatility for the Manappuram gold would be, it come around like 5.34 percentage. This is what we said, right? 5.32 percentage. But what we are expecting volatility to achieve our target. So we went and estimate the 5 days volatility and volatility in percentage, and as well as the volatility in levels. But in order to achieve our target 200, just all we expected only 3.54 percentage volatility. I mean minimum expected volatility, we can go and say like that, minimum expected volatility to achieve the target. So as I said before, we initiated a two leg. One is the long put, another one is a short put. So we go and take one quantity on each side. The strike price for the long put would be OTM 205. So current market price is 207.35. Strike prices, we are picking the strike price in OTM. So 205. And what will be the premium we pay? Because we are going for the long put, right? So we have to pay the premium, which is 9 rupees 5 paise. This is a premium for each unit. Actually, the lot would be 6,000. This is the lot. So how many days we are going to hold it? 5 days. This is the 5 days we are going to hold it, the stock. For short put, the same one quantity we initiate, but the strike rate is deep OTM. So we initiated the long put in OTM, but short put is in deep OTM, which is a 200 strike price. For that, we will be receiving the premium of 6 rupees 80 paise. Okay, this is a net debit. This is net credit. So overall, it would be a net debit of like a minus 225, which means this is the money it goes from our pocket. Okay. So what is the break-even point level? At which point we will start earning money? So 202 rupees 75 paise. When the price reaches below 202.75 paise, all the way we will start booking our profit. The maximum loss would be 2 rupees 25 paise in the premium, which means 13,500. The maximum profit would be 2.75 paise, which means 16,500 rupees in premium. Of course, there won't be the risk and reward would be around like 1.3 like that. So, and the reason why I have selected the Manappuram gold is the target is very near. I'm expecting it achieving maximum in 2 days. So that is the and moreover, technically we have a strong bearish candle. So hopefully I can expect market will reach minimum 200 at the price point. So and the target price would be 200. So this is our option strategy. So we'll go and see the delta, gamma, theta, vega. Again, I assume guys, you know very well about the concept of delta, gamma, theta, vega. In case if you are not aware of it, just leave your comment in the comment section. I will go and create a separate video for option Greeks. Delta is it's a rate of change with capture in premium by the underlying. For example, if you have a delta of 0.4 right here, so this is a put option that's in minus. So put option or option delta would be 0 to -1. Call option delta would be 0 to 1. Okay. So since this is a put option, so that's the reason it's in minus 0.4. For example, if a stock moved 10 rupees, let's assume like from 207.50 to 197.50. So underlying moved 10 points. So simple, you can go and multiply the 0.4 into 10 point. So that amount will added in the premium. 4 rupees. So that 4 rupees will added on your premium. So what is gamma? So gamma is it capture the rate of changes in delta itself. See, delta is capture the rate of changes in option premium by underlying. Okay, but here gamma is capture the rate of changes in delta itself. That's a gamma. So let's go and see the theta and vega. So as I said before, like option is a derivative contract. Which means it depreciation when which goes nearby expiring. When expiry dates comes near and near, option will lose its values every day. So how much it will lose? Like exactly for long put, every day it loses 19 cents on its premium. Okay, so if for example, if you have a premium of 11 rupees, tomorrow the option will depreciate 20 paise. The reason why we have a least theta here, since we have a very long journey, the option expiry date would be 26th of August. Still, we have not reached the August 1st itself. So that's the reason we have a very less theta. When options, when expiry comes nearby, the theta will be very high. So Vega, what is the Vega? Vega is simple. It's capture the rate of change of option value by volatility, which means implied volatility. For example, if volatility increase 1%, it will increase the option premium of 21 paise. Okay. If volatility increase 5%, it will increase the 1 rupees in the option premium. Okay, again it's vice versa. If we lose the volatility, obviously the option premium will lose its value. See, it's that the reason I'm telling you. So Greeks is a very important. All these factors influence the premium. I'm sure I have given a very brief introduction about the option Greeks. As I said before, in case if you want to know more about that, just leave your comments. I'm sure you will have some idea about this strategy. If in case if you do have any question or suggestion, or if you want to give any feedback, just leave your comment in the comment section. If you like my video, just go and click the thumbs up button, and don't forget to subscribe and click the notification buttons.